With stocks rallying to a new high for the year, how should you be positioning your portfolio? Let's get some insight from Lee Eugene Munson, Chief Investment Officer at Portfolio Asset Management. Also, Michael Crofton, CEO of Philadelphia Trust Company. Thanks to both of you for joining us. Michael, you are worried that the U.S. market may be transitioning into an emerging market. What makes you worry about that, and what's the long-term implication?
Well, what's making me worry about is the dollar. I mean, the key to investing in the emerging markets has always been to invest in the weak currency. And as our currency weakens, you notice that the market continues to go higher. In fact, the charts are a complete opposite of one another. As the dollar has declined, the stock market has risen. And I really get worried about that because if and when that reverses course, you'll see the stock market come in as the dollar rises. So I'm not really convinced that the fundamentals are in place to justify where stocks are. I think a lot of it has to do with the dollar, and that's a very dangerous predicament for the market to be in.
Lee, are you worried about the inverse relationship between the dollar and stocks? I was worried about that in the last hour, and Ron and Sana made fun of me.
Hey, Ron should be making fun of you, Melissa. I mean, here's the bottom line. You know, I mean, we are, and by the way, I think Michael has some very good points. I would take it to an extreme degree as a trader because all that the bulls have right now is a liquidity-driven dollar carry trade. And what this is it's a liquidity bubble masquerading as economic recovery. So right now, it's a great time for bulls and bears to hang out in the same bar and really get together because all we have with the bull side is liquidity. The bears, all the bears out there, which I play occasionally, is just a backdrop of poor economic data.
Wait, it sounds like you are worried about the dollar, though. You're not worried about the dollar? It sounds like you are.
Well, you know, I'm worried about the dollar in the sense of a long-term, you know, a secular decline. I don't think 2010 is going to be a great year economically. And I think when people wake up and realize that, I don't care what the G20 says, they're not going to print money forever. And if they do, we're eventually going to get inflation. But I saw today when the Fed chairman said there's never been more uncertainty about inflation, and that relates to the dollar and the direction of the stock market.
Sounds like you agree with me and not with Ron. But in any case, Michael, you still like techs and industrials and energy?
I do. I like sectors that are going to do well regardless of what happens in the economy. I particularly like natural gas. I like industrials because they're fairly valued. I like technology because I think there's definitely an upgrade coming, and technology seems to be the place where companies are at least spending money as they continue to drive costs down in order to make their earnings numbers, which is all that we've seen in the last 2 quarters. We certainly haven't seen any revenue increases. They're doing that by laying people off and increasing their commitment to technology. So those sectors should do well regardless of what happens in the economy.
And Lee, I see you're selling. You may increase your shorts by close tomorrow?
Absolutely. You know, I agree with a lot of what Michael has to say, but I'd also take it to the next step and say, I think what you have to do is you have to look for that whack, and then you have to buy it back. I would suggest that people, you know, find out what they like. If it's tech, it's tech. If it's energy, I agree with Michael. I like energy the most, but you need to scale in a little slower as we start going lower. And I think that as we get highs, I think they're going to be lower highs, and I think you have to be faster to take the trade and faster to take your profits. So I think that this is just a momentum-driven market, more on the downside because
all right, guys,
the dollar.
We got to leave it there. Thanks to both of you for joining us.